Hey guys, alrighty. So the markets are starting off the year a little bloody here. So, we didn't quite get that continuation of for our 10 weeks of green. This is now our first red week in the last 10 weeks now. So the next thing I'm really looking forward to here is CPI, and that CPI is coming next Thursday. Now I'll have a better prediction middle next week to kind of what's going on, but I think something to look forward to here is the fact that the jobs data that we got this week, it did everything but confirm rate cuts. So essentially what happened this week is we saw the market start to really aggressively pull back on their expectations of how many rate cuts we will get by end of year. So, and I have the chart posted here, but essentially markets were pricing at almost 7 rate cuts by end of 2024. And this was just as early as Friday last week. Now we are at 6 rate cuts, and there's a pretty solid chance that we only get 5 priced in. They also pull back from almost the 80% chance of a rate cut in March to only about a 50% chance of a rate cut in March now. So markets really adjusted. So next thing that's going to happen is CPI on Thursday. As of right now, the preliminary numbers I'm seeing is that expectations are actually that CPI is going to rebound to the upside. Now, it doesn't take, much common sense to understand that if CPI goes up, there is absolutely no way Jay Powell and the Fed are going to cut rates. If we are seeing CPI on the rise, and this is why I have the oil chart pulled up to talk to you guys, there is absolutely a 0 chance that the Fed is going to cut rates. Until that CPI likely is actually in the twos, I don't think we have to be below 2% to get cuts, but we need to be in the twos, maybe even the mid twos, before Jay Powell will cut rates. As of right now, if CPI year over year and core year over year do rebound to the upside, which is expected, I would expect a pretty solid red week to follow CPI, and that red week will likely take us into FOMC. I think we actually, and historically speaking, when the first week of January is bloody like this, generally January itself is bloody. It's only higher 40% of the time. So I think we are setting up for a very high probable red January. I think we're going to get the CPI that rebounds, and markets are going to kind of aggressively reprice in their expectations for end of year. We are going to then enter earnings season, which as of right now, expectations I do not think are very high, and I do not think earnings are going to come in very solid. And then last week of January, we get FOMC. And I can almost guarantee that Jay Powell, if that CPI does rebound, is going to say, our job is not done yet. It's going to be data dependent again. And they're going to start talking about the possibility of rate hikes if that CPI does not come back down. Now, we will go from January to March for the next CPI, for the next FOMC. So we'll have a reading in February, and then I need to look at the timing of the March FOMC, but we should get a second reading before that FOMC meeting. So if that CPI has not come back down by that March meeting, there's a really strong possibility we could see a surprise rate hike. Now, it wouldn't be a surprise as in like, here you go, here's a rate hike. It would be a surprise because for 2024, nobody has a rate hike priced in. There's a chance that we could start a major downside move in this market if we start going back to rate hikes. So let's take a look at the calendar next week. Other big notable things is the 10-year bond auction on Wednesday. I think markets will probably have a huge reaction to that. And the reason being is because the 10-year and the dollar right now are driving this market. I think the VIX is kind of useless in a sense, but the dollar and 10-year are in control right now. So let's take a look at oil here though. So we put a new weekly demand in here at 71.59. We have built a really strong support area that for the last basically month and a quarter, we have held. So you can see basically we have wicked through and bounced, and now we have, I mean, almost a triple bottom, but a solid double bottom, bullish engulfing weekly candle here in oil that is going to lead to a breakout. I am targeting this area up here on oil in the 80s for our upside move. Now, when I think about CPI, and again, we talked about this on my final end of year TA for 2023, whenever oil moved up, that next reading was almost always higher. When oil moved down, it correlated perfectly. So we are already expecting a rise in CPI, and we haven't even had oil move up. All oil has done is consolidated. If we get this breakout like I'm expecting over the next couple of weeks here in oil, and we see oil up in the 80s, then we are going to see CPI continue to rebound to the upside. That is a major, major bear case for 2024. So let's talk about the dollar here. So the dollar had put in that demand at 101.67 on basically middle of December. We attempted to break through it that last week, basically, had a major doji. And this is where I said on Friday last week that I thought markets were set up for the top to be in and that we were going to get the correction for January. Played out perfectly. We had the weekly reversal doji here on the dollar and on the 10-year. And we had the weekly topping doji on SPY and NQ, and future ES and NQ. So played out perfectly. A big old breakout here on the dollar. Now, we could not quite get through the weekly 8 EMA resistance, and we did not quite get to 103.164, which is our first target. But you can see this weekly bear channel that we've been in since middle of October is officially broken. Therefore, I'm looking for a breakout here in the dollar. My target is up here at the 104 area. Now, go over to the 10-year here. Same thing. We put a new weekly demand in here at 3.862%. Last week, I said with these back-to-back dojis, and especially this doji reversal candle here, we were likely to see a move to the upside. We broke our long-term bear channel that goes back to, again, middle of October, which is right when this rally started. And now we're seeing the 10-year make a move up. Our target is 4.171% to 4.235%. This is likely where we will target if we see this overshoot to the upside, which is very possible if CPI continues to rise and the Fed says we are not cutting rates. Markets are in for a bloodbath in quarter one, maybe even quarter two of 2024. Going over to Bitcoin, just real quick to touch on it. We are still kind of holding our resistance here at 43,000 to 43,800. We're trying to close out, and we got the weekly candle for Bitcoin doesn't close until Saturday night. So if we close over 43,800, we could see again that attempt for 46,800. However, right now I'm more bearish, but this is potential bull flag here. But again, everything is pretty much data dependent on what's going to happen with that ETF. So let's take a look at SPY here. So big old bear week here on SPY. So we had the big drop. We are in a nice bear channel now. We have had back-to-back days of attempting to get back over this daily 8 EMA resistance now, and we have failed twice in a row now. Not only that, but we have back-to-back closes below the daily 20 EMA, something that has not happened in months. So with this rejection here, and as you can see here, previous support, this double demand at 469.2 to 471.28 is now resistance. With this being resistance, again, my target is the daily 50 EMA support and about 459.16 to 461.54. Going over to the weekly here, so on SPY here, we have a nice new weekly supply at 475.36. So realistically on SPY weekly here, you can see we're basically in a range from 459.6 to 475.36. Until we break and close under 459.6, which is also about the weekly 8 EMA, and break this bull channel support, we could still turn this into a bounce to the upside. However, this bull channel support sits at 467.23. If we break through that, so essentially if we see any red next week, we are going to see some more downside here. My ultimate target is really about this 456.89 to 459.6 area, but I do think we could see 450.9. Going over to futures here, same thing. We have a nice bear channel forming. We got back-to-back closes under the 20 EMA. Same thing. We had an attempt to get over this 8 EMA and we hard rejected. Now, this doji candle very well could be a bounce to the upside. I would not be surprised to see that. However, we did get our green day, and now markets could continue onto a sell-off. My ultimate target still remains the 50 EMA in this 4600 to 4622 area. Weekly time frame here, something that's important to note is that 4820 is now supply. Nice double top bearish engulfing candle here. And unless we have a major 30-point gap up and never see red next week, we will break our almost 3-month long bull channel. With this channel support breaking, that is signaling bigger downside. Now, bears need to take it under 4681, which is the weekly 8 EMA support, and then we start targeting 4606 area. Going to the Qs here, same thing. We came down, attempted almost 3 days in a row now to get over this 20 EMA, and we could not do it. We are also early next week going to get an 8 and 20 EMA cross under, which is extremely bearish. I, at this point, again, am still targeting the 50 EMA support, which is 390.06 to 390.81. On a weekly time frame here, we actually, as you can see here, have a gap down on the weekly. A very, very rare occurrence to see a gap up and or a gap down on the weekly and for it to not get filled by the end of the week. We are coming into next week. Our bull channel support is 391.11. If we continue our downside, and you can see we barely held on to support of the weekly 8 EMA here. If we break through, then we start to target the 20 EMA and likely 383.86 supply area. Going over to NQ, same thing here. I could see the bounce potential on this doji candle here, but this could also be a temporary relief before continuation to the downside here. My target remains this double supply area at 16,032 to 16,090. Weekly time frame here, same thing. Unless we basically don't see any red next week, we're going to break through 16,409, which breaks our long-term bull channel support. That brings us at a target of 15,854, which is where the weekly 20 EMA support will be. Now, the VIX again is not really giving us a whole lot of help. We have built a nice double demand area at 12.08 to 12.43, and now we've built a nice double supply resistance area at 14.14 and 14.34. Now again, I still either feel that big money has not bought into this dump yet, or more probable, the VIX is being suppressed to prevent this from turning into a massive downside move. Now, this happened back in March 2023 also when we had the bank run. If you remember, we kept having these massive like 15% moves on the VIX overnight, but by end of day, you would see the VIX would be red, yet markets would be red. You know, seeing things like that are not natural. The fact that we have a negative 5.66% day on the VIX, and until basically the final 15 to 30 minutes of the day, markets looked like they were going to close red. And I mean, SPY-X only closed up 0.818%, and NQ barely closed up 0.1%. The Dow closed up 0.01%. Seeing things like that should not really be the normal. However, I could see a massive double bottom move up here. But I do think once they let the VIX go and it's over 14.34, that's when we're going to get those massive downside moves on the market. It's probable that they'll make us wait until CPI hits, and that's when everybody's going to kind of all collectively say, oh crap, this is bad. They're going to say, we're not going to get these rate cuts like we want. We're not bullish like we thought we were. We rallied in 2023 for no reason. once that starts settling into the market, we could start seeing VIX up, up in this 15 to 16, maybe even 17 area again. But more importantly, we're going to start seeing volatile markets and potentially some big downside moves. It will be very, very interesting to see what kind of plays out the next month or two here. But as of right now, I actually remain fairly bearish for the rest of the month. And I want to see what CPI says for sure. And then I want to see what FOMC said. December FOMC caught me off a little guard. I obviously was expecting a more hawkish Fed. I actually am a little surprised in exactly what I'm talking about today with the CPI already rebound or trying to rebound projected wise, and things like that. I'm actually surprised even last month that the Fed was so dovish. I'm surprised they came to the markets as much as they did. I actually really expected in that December meeting that they were going to stick to their guns and say inflation's not tackled yet and we're not ready to start cutting yet. But they went dovish, so now it's going to be even more interesting because they're going to have to walk back that dovishness that they have. So I'm very interested to see how this next month's going to play out, especially with earnings. Last earnings season, last earnings quarter, I felt like was not very strong either. And we did not have very many big rallies on tickers. And I think we're going to see a lot of that this time too. So, but all right, guys, I hope you guys had a great week trading. I had a killer week. One of my best weeks since May 2023. My best week of futures ever, and it came on a 4-day week. So it would have been nice to have that 5th day to really see what we could have done. But I've been doing the props. The props are going great. As of right now, I have 2 evals that are at the profit goal. Monday, I'll take 1 trade on them and close that out. And that will be transition Monday night into 2 more performance accounts. I do have a performance account right now. It's at about 3,100 in profits. So on Apex, I'm doing a 50K account. When you're at $3,100 or $2,600 in profits on a PA account, your trailing threshold stops at basically 0 or 50K. So basically, for me to blow this account, I would have to go all the way back down to 50K. So from here, my goal is simple. My goal is to get my PA accounts to 2,600. Once I'm at 2,600, my goal from there is to then, every 10-day payout period, get 2,000 in profits in each account. So if you think about it, if you have 10 trading days to get $2,000, that is literally only $200 per account. And if you can manage I'll have 3 accounts. If I can manage just $200, even just one payout a month, that's $6,000 for all 3 accounts I'm getting paid out. If I can do the 10 days twice a month, which I don't see a reason why I can't, at just an easy $200. I mean, that's either 1 5-point play on 2 contracts or 1 10-point play on 1 contract. I could pull out, and I'm hoping come February, this is what I'm going to do, 12K in profits. Now, the crazy thing about this is that I understand that there's a lot of hesitation on props, and I don't blame you. I was a little hesitant myself at first, but if you use them properly, the way I would equivalent it out to be is, if you have 50K in cash and you want to go buy a car, are you going to go spend all 50K on a car? No. You're going to get a loan, and then you're going to put that money into an investment or a high yield savings account, whatever, and that'll cover, the interest plus some. That's your goal, obviously. You're redeploying that capital that otherwise would be gone to make more money. So it's the same way here. Essentially to get these 3 PA accounts, I pay for 3 eval fees and 3 PA fees. Roughly about $400-ish or something like that. Call it 500, make it easy. So essentially for $500, I'm getting access to the potential to make $12,000 per month, doing nothing different. And not only doing nothing different, but actually doing less. So my daily profit goal right now is $500. It's been that for 2 years now, I think. So at $500 in my daily profit goal, at max, if I do perfect, I'm going to make about $8,000 a month. that basically throws in one red day or something like that, an off day, a low day. But to just make $200 a day, I could pull out 12,000, and I'm using it only $500 of initial capital versus 30, 40, $50,000. If you're trading multiple contracts and you trade overnight, you got to have all that extra capital for daily or for overnight margin requirement. That's a crazy difference, so that profit or that capital can be redeployed elsewhere to then make more money. So, if you use the props properly and you don't take it as a YOLO or a lotto, and you don't go in there just trying to make hundreds of thousands of dollars and blow up every time you do it, it is extremely powerful. So, when I first started doing the props, I blew a couple of them because, I got in there, I passed them, I passed my eval, I got my PA, and I was like, great, I'm going to go make a bunch of money now. But what I ended up doing is I just ended up overtrading. And then I realized there's no reason to overtrade because I'm not rewarded for overtrading. I'm actually penalized for overtrading because I either blow the account, I either give back profits, or I go over the maximum payout, which is $2,000 every 10 days, and I don't even get to take that money out until the 4th month. I mean, of course, eventually I get to take it out, but initially I can't even, there's really no reason to keep trading. So the more I thought about it as a logistical task of just making $200 a day, the easier it became. So this week especially, because I was trying to get to that trail thresh and then my evals I was trying to pass, I was going for more like $500-600 this week. So basically I take 2 trades each day, roughly, for about $600 to $800, and then I called it a day. Once I had my profits, I had no reason to keep trading. And that's why this week I killed it so much, because I didn't overtrade. I didn't just keep trading because I wanted to or because I thought I saw something. I saw my profits, I took my profits, and I was done. And then I just enjoyed watching the day and seeing what the market was going to do. So going forward, that is something I'm really going to focus on in 2024, is hitting my daily goal and being done and being content, being content with just making my daily goal. But all right, guys, I hope you guys have a great weekend, and I'll see you guys on Monday.